Steve, you're a big proponent of investing in the Nasdaq-100 index. I know we're here at the Nasdaq, so they have home court advantage, but there's a lot of indexes out there. Why do you like this one in particular?
I like the Nasdaq-100 because the companies that come into the Nasdaq-100 grow. They grow through innovation and technology. Companies that grow through innovation have delivered outstanding shareholder performance for the investors. Finally, our focus is retirement plans, very long-term investors. Innovation week to week doesn't really matter that much, but over the course of several years, a few decades, it becomes the most important thing.
There are also a whole lot of growth stocks in that particular index, and it seems like in recent weeks with the volatility, value is kind of gaining in popularity versus growth, which has done very well the past few years. So what are your thoughts on the value versus growth trade?
Generically, 401k investors should have exposure to all different markets, and it should be appropriate for their risk perspectives and what they're comfortable with. Having said that, if your time horizon is 20 years or 30 years, usually growth stocks that are focused on innovation tend to deliver a lot better. So that's where I believe people at least should have some exposure.
And once again, there's a lot of indexes out there, ever so many, especially with the introduction of all these new active ETFs and passive ETFs. Everything has an index. So why is this a good index for retirement plans?
Well, I think it's one of a handful of indexes that are good. So if you think of a three-legged stool, you need a large cap S&P 500, some sort of small cap Russell 2000, and I think a minimum third leg of the stool is a Nasdaq-100. And you can build a 401k investment option list around entirely index funds or a combination of index funds and actively managed funds. But I think the Nasdaq-100 is one of the critical three.
And what about folks who say that the Nasdaq-100 is too volatile for a 401k or a retirement fund? Because people have long memories and they do remember the crazy NASDAQ in the late 90s.
Yeah. So what I would say is the numbers don't really hold up to that perspective. Morningstar runs numbers where you're comparing the standard deviation of returns of the Nasdaq-100 against, say, Russell 1000 growth. So over the average over the last 10 years for the Nasdaq-100 is about 18.56. For the Russell growth, it's about 17.18. So same ballpark. Nobody would think twice about adding a Russell 1000 growth. Whereas with a Nasdaq-100, again, people that were around in the dot-com era look at that and say, wow, that's a pretty aggressive index. Since then, the numbers really haven't played out. And the flip side of risk is total returns. So if you look at the risk-reward return for the Nasdaq-100, over the last 30 years, the S&P 500 index has grown 2,000%. I mean, think about that, 2,000%. The NASDAQ has grown 6,000%. So the return rewards for taking on that additional volatility have absolutely been in the investor's favor.
And then finally, what's the best way to own it? As I mentioned, there's lots of different ETFs, there's mutual funds, you can buy the individual stocks in the Nasdaq-100. What's the best way to own it?
Well, in the case of retirement plans, low-cost, institutional class mutual funds are what your choices are typically. There's a Nasdaq-100 fund available on virtually every retirement plan platform. You just got to talk to your employer and have them flip the switch. It's right there ready for you to use.
All right, well, thanks for coming on and talking about it.
Thanks for having me. I appreciate it. Have a good day.